Most trading content tells you weekends are dead. Markets slow down, skip it, wait for Monday. And honestly, that's mostly true. But last Saturday, I sat down to check my charts. Hype on a Hyperliquid looked a bit busy. Not your normal volume for a weekend. So I took the trade. I hit 90% of my goal that same day and closed the rest on Sunday when I hit the other 10%. Goal for the week, smashed. Today, I'm going to walk you through exactly what I saw, what I did, and the one rule that savvy traders never really disclose about weekend trading. Quick context. If you've watched video 3, you know about pin money. I trade for one tangible thing each week. This week, that thing was microneedling, just $200. I normally take my main trade Monday or Tuesday. Last week, nothing good showed up, and by Saturday, I was about to write off the week. Then I sat down to check my charts anyway. Honestly, half hoping nothing would pop out so that I could write my pin money off guilt-free. But hype was sitting in a zone I'd been watching for 3 days. And here's what actually made me look closer. A busy market. Most weekends, the market feels like an empty restaurant on a Monday night. People are with their kids, big news isn't coming out, and big professional trading floors are closed. So when I see things getting busy on a weekend, I pay attention. The question is how I see that fast without staring at the candles. This is where a tool called PVSRA comes in. Price, volume, support, and resistance analysis. Quite a mouthful. Let me show you. It's free on TradingView in your indicators. Just click on it and it will add to your chart. Done. The PVSRA colors your candles based on how busy the market is. Bright green means lots of buyers have showed up, and bright red means lots of sellers have showed up. Pale or dim colors mean it's quiet. Not much happening. My rule is simple. Ignore the dim candles, they're just noise. I only react to the bright ones. Bright green at the bottom of a move, money is flowing in. That's when I look to buy. Bright red at the top of a move, money is flowing out. And that's when I take profits. Last Saturday, hype was pulling back after a bit of an uptrend towards the end of the week, and spent Saturday in a small consolidation, which is when I kept an eye on it. Quick word on where I actually place my trade. My setup is 2 tools. TradingView is where I draw and set alerts. That's where I think. Hyperliquid is where I trade. I connect it through my Phantom wallet, and I'll walk you through that wallet setup in another video. And honestly, Hyperliquid is the platform I would point any mom to in 2026. Here's why. A lot of regular traders who used to trade smaller crypto coins on Bybit, BitGet, or Binance, they've moved to Hyperliquid. Not for ideology, for one reason only. Liquidity. Liquidity is just a fancy word for, are there enough people trading right now so that I could get a good price? On a normal weekend on those other platforms, the answer is no. You'd see a price on the screen, click buy, and end up paying more than that. Hyperliquid stays busy through weekends. So when you click buy, you actually get the price you saw. One platform. Crypto, stocks, currencies, commodities. No minimum start and no paperwork nightmare. Back to the trade. The busy candles had me looking. I looked for a few different things to line up at the same time. It's like baking a cake. You need all the ingredients to come together, not just one. So I checked the rest of the chart and 3 more things were lining up. First, the TD9 buy signal. The TD9 is a tool that counts if the falling price is running out of steam. When it gives me a buy signal, the sellers are tired and the buyers are starting to take over. Second, the stochastic was turning up from down low. Classic oversold signal. Third, price was sitting at a support level and the chart had gone quiet. Candles were getting smaller and smaller. That's like a rubber band. The bigger it stretches, the more it snaps when it lets go. 4 signals lining up, that's when I actually plan the trade. Before I press buy, I log the plan in my journal. The free one in the Moms Who Trade app. The link is in the description. My entry was around 55.50. My stop loss was around 54. That's where I accept I was wrong and get out. My first take profit was at 59.35 and second take profit at 60.82. Risk reward was about a 5, meaning for every dollar I risk, I'm planning to make 5. Here's the part I want to be honest about. I used 10 times leverage on this trade. Quick reminder if you're new here. Leverage is when the brokers let you borrow extra cash to make your trade bigger than the cash you put in. 10 times leverage means that $100 works like 1,000. I know it sounds scary, but here's how it helps you. Think about it like a credit card with a strict spending limit. The card lets you spend more than what's in your wallet. But if you set a hard limit and stick to it, the most you could lose is that limit. That's what my stop loss did. I had 10 times leverage, but my stop was tight. So the most I could lose was about a quarter of my pin money cash. The leverage didn't change my risk. The stop loss did. Leverage on its own isn't bad. Leverage without a stop loss is the end. As a beginner, you should not be using more than 3 to 5x leverage. If you don't know where you're getting out before you get in, you should not be using leverage. Full stop. That's how people lose everything in one bad move. Get the stop loss right first, then we can talk about leverage. Once I'm in, the plan sort of runs itself. Price hit my first take profit an hour later. I sold off half of what I was holding. Sunday morning, price tagged my second take profit, and I took another big chunk off the table. I was about 90% of the way, so I just left a small piece still open. Crypto people call this a moon bag. It's a tiny part of the trade with no stop loss, just in case price keeps running. I let it bounce around for most of Sunday and closed it later in the afternoon. I'd already hit my goal and I wanted my day back. That's how I actually split a trade. Not all in, not all out, but layered. And done when the goal is done. So here's what I want you to take away from this one. Weekend trading is not off limits. Quiet market, stay out. Busy market, look closer. Use TradingView to plan the trade and use Hyperliquid to place it. And use a stop loss before you ever touch leverage. If you're brand new to all of this, go and watch video 1 and 2 first. Build the foundation and then come back here. See you next time.